Hi, and welcome to our session giving you an introduction to lead generation. My name is Sanjay Gadhia, and I'm National Sales Manager at Standard Life and Finance. During today's session, I'd like to talk you through what motivates people to use equity release, how to develop new inquiries, and lastly, I'll be touching on some information from our lightbulb moment research with respect to knowing your customer. So for this year, equity release customers are broadly fit into 5 categories, dependent on their motivations to release equity from their homes. We have seen many clients using equity release to support them with existing debt, be that paying off secured debt such as mortgages or unsecured debt such as loans, credit cards, and overdrafts. And in some instances, clients are utilizing equity release plans to pay the shortfall on a purchase for a new property. Lifestyle aspirations. These are clients that are using an equity release plan to support them when they are making decisions with respect to care. If it's to assist them by supplementing their income, for example, topping up their state pension and giving them a better and more active retirement. And in a lot of instances, we're seeing clients utilize lifetime mortgage plans to support them whereby they're making home improvements or modifications to their existing property, knowing that it's going to be their home for life. Family aspirations is another reason that we're seeing clients utilize equity release plans. Widely known as Bank of Mum and Dad, these are applicants that are supporting their children getting onto the property ladder. Whether are children or grandchildren, applicants are supporting them with tuition fees and rising costs with student living. And more so in 2023, and we expect this to continue, where applicants' beneficiaries are coming out of their existing fixed residential mortgage rate and their new mortgage payment needs to be supplemented with additional income, and they're reaching out to mum and dad to provide them with that support. Mum and dad are subsequently taking out an equity release plan via gifting and supporting their children maintain their existing property. The fourth reason is for inheritance planning. Just as a reminder, any income received or monies received from an equity release plan is given tax-free. So we often see an equity release advisor combined with an independent financial advisor or a wealth planner and supporting the end client with a holistic approach to their retirement strategy. In a lot of instances, and depending on your client's scenario, a lifetime mortgage may support them when it comes to reviewing their inheritance tax. And lastly, divorce. In industry, these clients are often known as silver splitters. But in some instances, and once more, dependent on the client's scenario, a lifetime mortgage has been utilized with respect to a financial settlement, where the assets are being split up between the current applicant and their ex-partner. This information has come from Keys Market Monitor, and this graph illustrates the main reasons clients took out plans in the second half of 2022 and where we have seen that change for the first half of 2023. Now, as you can see, the first is gifting. 16% of clients have informed us that they utilize some or all of their lifetime mortgage to form part of gifting, compared to 12% in H2 2022. We've seen a vast increase in clients taking a lifetime mortgage where it comes to home and garden improvements. So for H1 this year, 12% of clients have used some or all of their lifetime mortgage compared to 7% in the second half of last year. We've seen a slight decrease in clients utilizing an equity release plan to pay off unsecured debt, going from 9% in the second half of last year to 5% this year. And it's been quite steady where clients are utilizing an equity release plan to make some form of mortgage repayments. This is typically your secured debt, and what we're widely seeing is the expiration of a current interest-only mortgage plan. So as of H1 this year, 32% of clients utilize some or all of their equity release plan compared to 40% in the second half of last year. Last year was Standard Life in Finance first full year of trading, and as part of our first year anniversary report, we actually looked into the specific reasons why clients took out our plans. It was really refreshing to see the differing reasons why clients have taken out an equity release plan with Standard Life and Finance. But those highlighted in white are those I want to discuss now. Really the core reasons that we're seeing this year and last year and will continue to see as the year progresses. Over 1,500 clients utilized our plan to repay their existing mortgage. Over 1,000 clients utilized some or all of their plan to square off any unsecured debt such as loans. But furthermore, we are seeing a host of clients, over 3,000, are making deliberate decisions to make adaptations, modifications, or improvements to their existing property. Knowing that their property is going to be their home for life, over 2,200 people informed us that they were adapting their home and modifying it to make it more comfortable. And more deliberate decisions. 740 applicants informed us that they actually upgraded their kitchens. Furthermore, you will see in between those two figures, 789 informed us that they were making their bathrooms more functional. Now, once more, this data has been taken from Key Group's H1 Market Monitor Report 2023. And what this in fact informs us is, as we've seen in previous years, 42% of the lending mix took place in London and the South East. And if you include the Southwest, over 50%, in fact, over 54% of all lending took place in either the Southwest, the Southeast, or in London. And on the right hand side, we continue to see the Southeast being the highest performer. Over £260 million of lending in 2023 has come from the Southeast. And in fact, the number of plans that were taken out, the Southeast remains to be the highest at over 2,750 plans. So where will you find your customers? Firstly, we want to focus on traditional sources. And really, I want to talk to you about your current client, that lifetime mortgage application that you may be processing right here and now. At the end of each lifetime mortgage, do you ask your clients for a recommendation? Are you part of vouch for example? Do you ask them to leave you a rating and inform you and potential clients of the fantastic service that we know you offer? How about referrals? Word of mouth is arguably the best way to obtain a new equity release customer, and in fact, it's free. But that client that you're discussing right now, that lifetime mortgage application you're processing right now, do they have friends or family in a similar position? Can the service that you're providing this customer today support their friends and family and give them peace of mind? It is always worth asking that client, do they have anyone else in their friend circle, in their social circle, or within family even? Do they have a need? Do they need a financial solution? Can you speak to them and give them some sound advice? Notwithstanding, any word of mouth referrals are free, and we always like a free referral. Upsells and cross sells. Are there any other plans that you offer your clients? Any other solutions whereby a lifetime mortgage can be intertwined and support that potential client, their parents or their grandparents? But it's always worth bearing in mind that client you may be speaking to today may not be a equity release age, but they may have family that are. So if you do offer other solutions, please bear in mind that although that particular client may not be suitable for equity release, they may have family that are. How about your existing database? Do you hold a CRM? If you have that data to hand, why don't you consider sending an email shot to them, or potentially a newsletter too? There is still some taboo and some myths that need to be busted about the equity release industry. Can you consider sending a mail shot or a newsletter to inform them about what the modern lending features can offer these potential clients? What lifetime mortgage plans can do for your clients? How about case studies? Do you have clients that are able to give you that recommendation whereby they provide you with a case study or give you authority to do so, that in turn you can relay to your existing database. And lastly, your network, your professional network. I have some examples relayed here. Builders, estate agents with first-time buyers, the residential mortgage tightened up on loan to values, and potential budgets with respect to deposits may not be as stretched as they can need to be to support that first-time buyer purchase their property. Can that estate agent refer that first-time buyer or discuss it with their parents and provide you with their parents' details? Can you support them with a gift to increase that initial deposit and in turn reduce their mortgage repayment? And for that estate agent, you'll be able to save them a client that they may have thought they'd lost. Lastly, in the solicitor space, do you have any solicitors that deal specifically with family law? I mentioned one of the 5 categories being silver splitters. Those applicants aged over 55 that are facing a divorce. It's most likely they'll be speaking to a solicitor. Are your solicitor connections aware of how a lifetime mortgage, in this instance when it comes to a divorce settlement, potentially support them with their financial settlement? Now let's talk about online presence, and specifically social media channels. For example, do you have a LinkedIn profile? And how active are you on LinkedIn? There's some fantastic sessions I've seen previously supporting why LinkedIn is a fantastic tool for you when it comes to potential equity release customers. How active are you on that platform? LinkedIn enjoys it if you are active, if you are liking particular posts, if you're posting yourself, if you're commenting, sharing. And lastly, on your profile, do you have a picture of yourself? I mentioned slightly further down, be personable. People buy from people. And when I ask if you have a profile picture on your LinkedIn page, make sure you do. Because ultimately, people want to see your prospective equity release customer wants to see you before you've even met them face to face. And your LinkedIn profile is highly ranked when it comes to searching you on search engines such as Google and Bing. So please bear it in mind. Next, I want to talk to you about your website. First and foremost, particularly now, it is absolutely pivotal that you had some form of online presence and your website is currently being updated with any changes that take place in our industry. Previously, I talked to you about your existing customers and when they provide you with recommendations, for example, on Vouched For, they may send you a text or a message. Ask for their consent that you can put that testimonial on your website. And if you want to be brave, ask that customer that you've just completed their lifetime mortgage application to send you a quick video snip too. As individuals, when we're visiting websites, we want to see a host of different media content. So try and see whether or not you can mix it up, not specifically just to have text solely. You may want to consider having images of your clients, providing they give you consent, and also whereby they might give you a video case study, a differing type of media content to make you stand out amongst the crowd. Be personable. I asked or suggested whether or not you have your profile picture updated on your LinkedIn page. And if you have a website, we often go to autopilot and we like to inform our potential clients of how qualified we are, how much experience we have, not only in the later life industry, but in the financial services industry too. But ensure that you're personable. I mentioned that people buy from people. These are the softer skills. So in terms of potential icebreakers, please have a think and consider mentioning what your family life is about, your hobbies, what you like to do outside of your work life. Do you have a dog, for example? Do you enjoy a bit of wine tasting? Do you like playing golf? These little snippets about your personal life can support you with immediate icebreakers for clients that you may not even be aware are searching you or viewing you as their potential equity release advisor as they're going onto your website. Now let's discuss your current customer. And really, this is quite a bold statement. Are old people really old? The typical demographic we're dealing with today, 55 plus, with the average age of an equity release client being 71. So here are some famous faces. And you'll see the common theme across all of these lovely ladies and gentlemen is that they are all of equity release age. Sadly for me, though not to my knowledge, I'd like to inform you that none of these actually have taken out plans with Standard Life and Finance. But what we want to demonstrate here is what I mentioned earlier. These are not your atypical equity release customer who you may find at your local bowls club, your local golf club, for example. But these are those who have potentially walked away from their working life with gold-plated pensions. They have more spend. They're more affluent than your needs-based client, but there is potentially an option to discuss an equity release plan with them. This could be to support them with their retirement and their lifestyle and how they want to ensure that they maintain their way of living from what they did whilst they were working. I mentioned earlier on that Standard Life and Finance carried out some light bulb moment research. And what I'd like to talk you through today is understanding your client's mindset. What are the common concerns that customers are carrying with them throughout the process? And how can we seek to alleviate them? When a customer decides whether equity release is for them or not, how can we switch that light bulb on? And lastly, I want to talk you through how gender can impact a client's response to the advice process. So here are the 5 most common concerns that were raised following our research. We have actually split out the responses depending on whether the applicant or the person that gave us the information was male or female. So the first one was that they were concerned about what inheritance they could leave their family. Over 35% of female and over 40% of male customers informed us of this. Now, with modern lending features and the ability to make some form of partial repayments should they wish, they can ensure that they can maintain equity for their beneficiaries. The second most common reason was that their home was their security and they did not want to risk losing it. Now, as equity release council members, we must abide by the no negative equity guarantee. So all lifetime mortgage plans ensure that your clients will never be at risk of losing their home. Now, over 30% of male and over 37% of female clients disclose this as their second most concern when they were considering an equity release plan. But educating them and informing them of the no negative equity guarantee will instantly allow you to alleviate this concern. The third most common would be that it's a really expensive and complex process. Yes, in some instances, there can be some costs incurred. For example, if there is a lease extension, or whether they may need to do a deed of variation. 1 in 4 male and female customers informed us that this was their third biggest concern. And whilst they need to pay advice fees and legal fees, a lot of lifetime mortgage lenders give you no application fee and no valuation fee. And the fourth most common, and actually I was quite pleased to see that this was the fourth, because if we actually carried out this research a few years ago, I wouldn't be surprised if this was the most concern for any client, male or female. But they had heard bad things about equity release in the past. Over 1 in 5 disclosed us, be it male or female. Now, what this does show me and us is that the industry, the Equity Release Council, lenders, and more so you as advisors are constantly going to the potential end customer and educating them about what modern lifetime mortgage plans can do, how flexible they are. For example, fixed early repayment periods as low as 4%, 8%, and most commonly 15%, or the compassionate or bereavement clause, supporting them in that what if scenario. What if I was to pass away or end up moving in care? A lot of lenders give you that 3-year window on one of those 2 life events. Ourselves at Standard Life and Finance, we actually give you an unrestricted window. Downsizing protection. What if I had to move? Well, in fact, a lot of lenders give your clients the option to utilize downsizing protection, and this typically kicks in from year 5. With ourselves at Standard Life and Finance, we give this feature to your client from day 1. Again, modern lending features to support you to alleviate any concerns your clients may have. And lastly, I was accessing it too soon as I may need it in the future. 20% of female extra release customers and 15% of male extra release customers informed us as this being as one of their concerns. And in some instances, they're correct. Depending on their needs, they may be accessing it too soon. But what we are seeing is that advice suggesting that they take a small initial loan. However, they build in a large cash reserve facility. So they take what they need to have for here and now, and in the future, it can support them in later life. Furthermore, we asked as part of the Lightbulb Moment research how many males or females knew that their existing pensions and savings was not enough to support them in their later life years. And this information was provided by these male and females before they met an advisor. So just under 15% of women and 20% of men informed us that they already knew that their pension and their savings was not going to be enough to support them. We have a host of support available for you, both at head office and in the field. You can contact our advisor support team on 0333 307 9000, or you can email us at info@standardlifehomefinance.co.uk. You also have a dedicated telephone account manager depending on where you're based geographically, or you can contact your business development manager or myself. We're all happy to help. Thanks for watching. I hope you enjoyed the session.